And so owning your home is definitely that first step. But if you're thinking about getting into, single family rentals or, fix and flips, you should be doing it in a way where you can get to that property within at least 30 minutes.
Welcome to Unstoppable Podcast with Faris Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and the wisdom of how they sold their first million.
So why do you think that is it that easy to become a millionaire doing property?
I would not say it's easy, but it's a great opportunity. And
Why?
What I would say is that, so 90% of millionaires have real estate in their portfolios, right? So
Absolutely.
I'm a data-driven guy. So I just look and see, what has past history shown us and how did millionaires get to become millionaires today? And so when I see 90% of millionaires are invested in real estate in some form or fashion, that's not a clue. That's like a hammer over the head. Nothing is risk-free, no type of investment. To a certain
Absolutely.
extent, you can't control all the variables. But with real estate, you have more control than, say, investing in public markets, right? So, you've seen it happen before, but the CEO of a major company maybe has too many glasses of wine and tweets something inappropriate, and their stock price goes down 15%, or they bring in a new CEO that just misses the mark. And then all of a sudden your value of your investment has gone down. Or like we're experiencing right now, there's some political turmoil with tariffs and different economic changes that are creating turmoil in the markets. And so you're riding a roller coaster, where with real estate, if you really get smart and you niche down, and this is, interesting because I said that was the first lesson, right, of growing a business and getting to that first million. So in other words, you're not investing in real estate in the United States, you're investing in real estate in your own market, right? So, if I'm advising a young real estate entrepreneur or investor, generally my first piece of advice is buy your own home first. Now you may buy a duplex and move somebody into the other unit there and minimize your expenses. But, take care of yourself first, because, the average net worth of a home owner in the United States is approximately $300,000. The average net worth of a non-homeowner is basically zero. And we're not even talking about debt. You factor in debt and they're probably upside down. And so owning your home is definitely that first step. But if you're thinking about getting into, single family rentals or, fix and flips, you should be doing it in a way where you can get to that property within at least 30 minutes, maybe an hour. So if something were to go wrong, you're on site that day and you can be home by the end of the day. So I would never advise an investor to buy real estate, in another state for their first deal. That could come with time, but initially you want to be real close to your deal. And that's really what I'm talking about when I'm talking about niching down. But now with real estate, a couple of things, you can have the appreciation that the market brings, because at the end of the day, land is a limited resource. They're not making any more of it. It's immovable. So if you buy intelligently in a great area with great market dynamics, get into real estate. And I think for me, why I like real estate is that get involved. You're going to get just appreciation that occurs because the value of the asset is going to increase. Home values outside of the Great Recession have always gone up in the United States. But why I love it, that's a great factor. But why I love it is you can force appreciation through strategic renovations and efficiencies in how you run that property. So it's that idea, at least what we do at Faris Capital Partners. I can go buy an 80s, 90s, or early 2000 apartment building, put $12,000 to $14,000 in a unit, and then drive $300 to $400 more in rent. So we're forcing the appreciation of that asset through those strategic renovations. So that's why I love real estate. The third factor is taxes, right? You have incredible tax incentives to own real estate, whether that's through depreciation. You can do cost segregation studies. That program around bonus depreciation is sunsetting, but my suspicion is the Trump administration will probably bring it back, since they initially brought it forward during his first administration. So even without it, depreciation, depending on the deal, you may even be able to write off some of the interest, and all of those factors combine to make real estate for me, where I love to invest my money. Now, to be clear, I put money in the public markets too. I think about that in terms of retirement. It's a rainy day. Should everything else go wrong? but my wealth creation is done through real estate.
So yeah, sound like a good idea. If in the United States president that is a property developer,
Yeah, yeah,
it sounds like it's gonna be easy for people in the property business to thrive at least for 4 years.
yeah, yeah,
So what is so opening the because my first business was in real estate. We managed to sell over 5 million in London. So I'm very grateful for the real and this became the foundation of all the businesses that I have in the future from restaurant to an English school and so on. However, how you mitigate the risk because the other side of the coin is when something goes wrong in real estate, it's a lot of money.
yeah.
So, any big challenge that you face in your real estate business and how you overcome that challenge?
Yeah, I mean, I would say that the things you have to be super mindful of are, your debt, right? And if you're taking on
Don't
debt,
over leverage yourself, right?
that's right. Yeah. And that's one of the beautiful parts about real estate, that leverage, right? You can get a mortgage and, really drive down, the cost to acquire. And, if you get 200,000 in leverage, put 20,000 into the deal and it sells for 300,000, you can just do the math there, right? That's an incredible return, but making sure you have good debt structure. So for example, at Faris Capital Partners, we never take on floating rate debt. We only do fixed rate debt. So we know what we're going to have for the life of that investment and we know what that interest rate is. So that's one thing. Having proper cash reserves is another critical component. So on every deal we do, we have 6 months of principal and interest for those mortgage payments socked away in a bank for that rainy day. So if you're buying a single family rental, you should have
so always take longer than you plan and always cost more money than you gonna cost at least with unless you have a lot of experience, but still you need to have a gap when it comes to real estate. It's a fantastic vehicle for entrepreneurs to have like you shared like 90% of the millions all over the world they have real estate. And this is the second question that I want to discuss with you when it comes to wealth creation, because we interview a lot of entrepreneurs in this podcast on Unstoppable 5 Steps How to Make Your First Million. And there is something that we see a lot that can be improved in terms of business owners, because especially if you're first time business owner, that lack of experience might lead you to, okay, I have this business and all the money that I'm making, I'm reinvesting in this business, and all the money that I'm making, I'm reinvesting in the business. And one day something happened with the business, COVID, market changed drastically, and then you're with nothing and you don't even know what's happened. Where the more strategic way of doing it is you're making money, substantial money with your business, you invest in a property deal, and the money that you get in the profits or the rental that you're getting from this property, now you can use this money for marketing. You can use this money to put it back. You make a little bit more money in the business. Now you invest in the second property or in another vehicle that can give you this monthly cash flow, and now you have double money for marketing. So in that way, you are protected in the same way that you have some money in the stocks market. You don't have to, because you own a portfolio. However, it's a way of you to diversify your wealth in a way that you diminish the risk. Some people that I know, they own several properties in United Kingdom, several properties in United States, and they doing this because the currency have UK have a pound, he have a dollar. They come on holiday here, and then they work there, and it's a way of them of balance out them, and in a way. However, so when it comes to risk mitigation, what message do you have for entrepreneurs out there that without knowing, because they are first-time entrepreneurs, at least you already have one exit, you already have found your own company, you exited, and now you're working in a second one. So we can say it, because first-time entrepreneurs, they are very focused in the product, right? Now, second-time entrepreneurs, now we see things differently. We think more about world creation as more important than actually the business, because we can We can start it, run it anytime we want, but it's as hard to keep the money actually to make it. So so what is your point of view,
Yeah.
or what advice do you have first time entrepreneurs that, because they don't know the risk that they are involved buying putting all the money they making in the company in order to expand, and all the money making in order to expand the company without diversify,
Yeah.
it's a huge risk for them. So what's your point of view on this?
Yeah, so I think you nailed on something there that I think is something every entrepreneur should consider. And you said sort of like your business is making money in real estate. So one thing that I found a lot of successful entrepreneurs have done is they actually own the building they operate out of, right? So maybe you have
there
a
you
service
go. Yes.
you offer, right? Like a massage, or a spa. Buy the building that you operate in. Now, maybe it's a 4 or 5, unit retail center. And so you're cash flowing because you're renting out the other units and you're not paying rent on your current unit. I mean, you have to cover the mortgage, obviously, but if you set it up the right way, the rents can do that.
That's a great idea, by the way.
Yeah. Yeah. You buy in an intelligent location and the value of that asset is increasing. And candidly, Harry, I've had some folks that I know, that had service businesses that at the end of the day, in the final analysis, the building was actually worth more than the business, because they had it for 20 or 30 years, right? And so, for example, I have a friend who has a very successful bike rental business in Hilton Head, South Carolina. If you don't know that market, it's a vacation market on the coast of South Carolina, very high net worth area, but it was designed with bike riding in mind. So when vacationers go down there, they want to rent bikes. And so he also does e-bike rentals. Well, he bought the retail shop that he kind of repairs the bikes in, and it's like really more of a shop, but people do stop by. He sells some e-bikes that way, but he's just watching the value of that asset increase over time, and he's using it as a shop. So instead of doing it in his garage or renting from somebody else, he's actually building wealth while operating his business.
Operating the business.
Yeah. So say you own a real estate company or a plumbing concern, buy the building that you operate in, right? And I think that's a key factor. Now, when you do that, you still have to buy.
You can write off also. You can write it off because you're using it as a business. The business is paying for it, so you can depreciation and
100%. That's right. I mean, so I think that's the thing I think a lot of entrepreneurs actually miss. They rent the building.
It's the foundation of the American dream.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.